Now, one of the reasons I'm actually kind of pushing back on this is actually, in my experience, I talk with a lot of analysts as part of my job. So I run investor relations. And so I'm talking to a lot of the investment banks, I'm talking to the research teams and all that. What I have found is that this model makes more sense to them than Bitcoin does, like way more sense. The problem with Bitcoin, I'm not saying it was a problem, but like, is that it didn't have cash flow. You couldn't model it. Now, Treasury companies are infinitely more modelable. There are growth rates, there are debt loads, equity sales. You can watch the balance sheet fluctuate. They trade at a multiple. It's an MNAV, not a PE, but like, what's the difference in certain ways? And so when I've spoken with a lot of these people, a lot of these analysts and people at investment banks, they've always said to me, this is mining 2.0. They've got mining. They're talking about treasury companies as mining 2.0. It makes sense. They're using public markets. They have metrics you can evaluate them by. You can decide, is this a good company to issue a convert to or not? So I think it's actually way more intuitive. I think they will get it. Also, the simple truth, they're able to make way more money from it because there's all these securities offerings. There's ATM programs, there's converts, there's pipe raises, there's all of these things are a way that they can actually profit, which they couldn't with Bitcoin. And so I actually think it's something that makes more sense, and they're more incentivized to like try to understand, especially because if like your bank isn't doing it and the next one is, well, they're out competing you in this domain, right? So just to stay competitive within your own little bubble, you kind of need to know what's going on here. So I think there's a lot more engagement.